Welcome to Drill Down Earnings. We have latest results from Lattice Semiconductor. They're not good. Stock market doesn't like it. But this is the business story behind one stock on a move, not just the stock story. I'm Cory Johnson, Futurum Group's chief market strategist. And we care about Lattice Semiconductor. It's an important company in the world of field programmable logic. So chips that can be reprogrammed once they're in the field. Really important sector here. But a really tough quarter for this business, second quarter earnings. And yeah, they were challenging. They missed Wall Street's estimates, but let's dig a little bit deeper and talk about what they did. So yeah, let's take a look at the quarter here. So revenue for the quarter, $124 million. Gross profit margin, 68%. That's all fine and good, but worse than it had been a year ago. And maybe importantly, the CEO left recently, left for a company called Coherent, which I happen to own shares of in full disclosure. But Esam Elashmawi, the chief executive officer, the interim CEO, talked about the industries that they're in, and they're just kind of in the wrong places right now. Inventory normalization is what he's talking about. We've been hearing a lot about that. But fundamentally, programmable logic across the board, these guys saw a 35% decline in sales. And then when we look a little bit deeper, we see even more worrisome signs, which is that their inventory situation is getting a lot worse. Their days of inventory were up 33% on a year-over-year basis, again, as sales were down 35%. That inventory number just exploded. They've got 236 days of inventory on their own shelves. Forget what's happening at the customer right now. And that's just a really tough problem because they can try to improve things and improve their products, but if their customers are sitting in inventory and they are sitting in inventory, they're running a less efficient operation than they want to. And they certainly came clean about that in a conference call. They do have some diverse businesses. They're in communications, they're in industrial and automotive, they're in consumer. The problem is two of those three markets are shrinking a lot for field programmable logic, at least in terms of their sales. And the smallest one, consumer, isn't doing much. So how did the stock react? How do you think the stock react? The stock tanked. In after-hours trading, the stock sold off significantly. If I look at the hard numbers here on my monitor here, we see the numbers for Lattice down 13% in after-hours trading. The stock was already down 40% for the year, so that's just not good for this company. Nonetheless, the acting CEO, Esam Elashmawi, as I mentioned, was trying to paint a positive picture. He's a former chief marketing officer and saying, look, there's some new products, there's some new customers, and so he was asked by analysts on the conference call, what makes you believe there are signs of improvement? What are the signs of improvement that you see?
What are the signs of improvement we see? Well, first it starts with the customers always. I interact with the customers quite a bit. We talked about that. We do see normalization at the customer side, and we do know that we are under shipping to demand. But also some of the operational indicators that we see as well. If you look at Q2, towards the second half of Q2, we start to see an uptick in the bookings, and that was a really good sign for us. In fact, we're starting Q3 with a higher backlog than we started Q2 with. And that's a good indication as well that things are starting to turn. So when you combine the customer inventory normalization, we're shipping under demand, we see bookings increasing, and then we start to see that our backlog going into the quarter is healthier. Those are all signs for us.
So healthy backlog, boy, we sure hope so. But right now, the numbers they're printing are challenging, and the stock market is trading the stock down as a result. All right, but what's it all mean? I'm going to give you one number. You got to remember about the field programmable logic and all of these different. Look, the one number that tells you a whole lot. The Drill Down Earnings Bite right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Lattice Semiconductor earnings, second quarter earnings, Wall Street doesn't like it. What's not to like? $124 million, that was the revenues, down 34%. But that's not the big number you want to remember. The number to take away, the Drill Down Earnings Bite, the number that means a whole lot. The number that means a whole lot is 3. Because they're in 3 businesses that are all doing lousy. They're in communications, which is doing terribly for them, down 15%. They're industrial and automotive, doing even worse, down 50% on a year-over-year basis. And their small communications business, consumer business, I should say, up only 9% on a year-over-year basis. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And of course, you can check me out on X at Cory TV, on Instagram and TikTok at Drill Down Pod, and yes, at the 6-5 Media page on YouTube, all kinds of earnings news. Leave some comments, tell us what you think. We can't wait to hear from you.